Ladies and gentlemen, welcome to a special episode of the Fintech Fridays. It's not only special because it's Saturday and we missed Friday night, but also Timothy Sweeney ended up joining us on the show. Tim, how you doing?
I'm doing pretty well. I'm over 30. Now we just needed to stock over 30.
Yeah, there you go. There you go. To the rest of the cast, Steve, how you doing, brother?
Can't complain. Pretty happy about earnings this week.
You were very happy about earnings this week.
I was very happy. I am back to being a fully convicted SOFI bull.
Roy?
Yeah, great earnings. Glad to be here. Real quick note too, Tim, we really appreciate you joining us here. Tim is always a special guest, but he is not the special guest we originally planned on. Some of you guys might have seen who that is. That special guest will join us next Friday. A bit of a mix-up on my end. So, but Tim, appreciate you, brother.
Thank you for making me second special guest.
You're super special.
I feel so super special now.
Great way to make Tim feel welcome, Ron.
Yeah.
No, like seriously, like I'm always
I
excited.
would have married you, but
Yeah.
You're making it seem like Tim was a backup or something.
No, he's definitely not. Love when Tim is on. He's a great, and what this does is it gives us the opportunity to like really break down SOFI earnings a lot more than we would have probably done if our other special guests had joined us. And so I think this is perfect.
Yeah, I mean, I think we all know where the four of us stand. I think we should start with Tim and get his take on what the quarter was and just get into it.
You don't want to say hi, you don't want to say hi to Tevis real quick?
We said hi to Tevis. What are you talking about? We were all backstage.
So yeah, by the way, that's the reason why we're late, by the way. Tevis came in late. So that just want to set the record straight. He was too busy watching the Jays game.
I love how your thing still says Ned Flanders, by the way.
Yeah, it's still Halloween.
Somewhere.
I might keep it this way through all of through all of Movember. Keep this growing out. I might have to shave it. I should probably shave it today and then watch it grow back through the month. That's what you're supposed to do, right?
Yeah.
Okay. Tim, sorry to steal your spotlight.
I thought I think the earnings were great. I had thought they'd get to 1 million members. And so when I was reevaluating it, I think in my mind, they might have actually got there, but they just deferred everything. And I'll tell you why. Number one, the rate cut was September 17th, I think. And at the time of September 17th, maybe people were waiting for the rate cut, but then they said they're going to have another rate cut. And I would expect the business in the last 2 weeks of September was really good. And so I was thinking, if they had really good earnings, would Novo manage those earnings? And then all you have to do is hold back a week of those closings to get them into the next quarter. And you may not have the infrastructure to handle that big inflow. So you wonder how much, like with Southwest on their debit card, when Southwest said they had to quadruple the people because they had so much interest, you have to have the infrastructure to onboard 1 million, 1.5 million. You could think, okay, I can get 800,000, so I should be able to get 1 million. I should be able to get 1.1 million. But also, I think he might have deferred a little bit. And so I thought those earnings were really good. I thought it would be 10 or 11 cents because I don't think he would let it go higher than 10 or 11 cents because he wants to set it up for the fourth quarter. And the fourth quarter is really interesting to me. I've said, I think for 6 months, I've said that I thought that the price would be 28 to 32 by the end of the year. And I thought that the earnings by the end of the year would be 40 cents. And one of the things I had a post on is the reason I think it's 40 cents is not because he's going to, and now that he's at 37 cents, he's got to get to 40 because of the way the tax rules applied. In the big, beautiful bill, they did a couple things that they made the changes to the R&D expense. Now, for accounting purposes, you always had to deduct all the R&D expenses during the year they're incurred. And so you'd say, okay, well, you're having a bigger deduction than you would have otherwise had for this year because you're going to have to deduct all those expenses for tax purposes. And so when you do that, deduct those for tax purposes, you get lesser tax. Your accounting income doesn't change because the whole financial statements under GAAP is done under the GAAP. Only the tax provision is done based on the tax laws. And those look at all those factors and income expense differently depending on what the tax law regulations are, not what the accounting GAAP rules are. and it's called provision work. And throughout the year, they kind of half-ass estimate it based on what average tax rates would be, effective tax rates from the past, and they try to adjust it, but they really make the adjustment in the fourth quarter. But there's one other thing that's missing. In the big, beautiful bill from 21, 22, and 23, they had to amortize all their R&D expenses for 5 years. And so now in 25, and they didn't have any profitability in 20, until late 24. So they can make an election, but they can only make it in the fourth quarter, and it will hit in the fourth quarter to take all those unamortized R&D expenses as an expense for tax purposes in the fourth quarter. Plus, the big, beautiful bill also added some additional accelerated deductions elsewhere. So his effective tax rate is not going to be like 21%, which would be like the standard rates that are applicable that you'd look at. Even though they adjusted the provisions down to try to match, they don't do a real good job of it. Don't try to do it until the fourth quarter. And so what happens is you're looking at 4 to 6 cents that could hit in the fourth quarter if he makes those elections. And you'd want to make those elections because that's money he's actually going to have to pay in taxes. That's cash flow. You want to get that back. And that's not a temporary difference. It's just a one period hit. So, he may even try to make one election and not the other election just to get this number, but he's going to get the 40 cents. If they have any kind of contracts on Robinhood about whether or not it's going to be over 38 cents, I'm going to get a Robinhood account. And I'm put a lot of money that's going to be 40 cents because it has to be that. And he's all everything, if they delay the interest rate deduction in December, to me, it doesn't really matter that much because if they just do it in January. It could affect the economy, but I don't think it's going to affect their business negatively because I think people are piling on, and the anticipation of low rates is what allows them to sell a lot of the loans. So I'm pretty bullish on it. And I'm not, remember last year I said it's going to be $7 to $9 for 6 months and the stock wasn't going to move. So I'm not like a perma bull just, talking crap. I kind of analyze this stuff and figure it out. But it's, and Steve was right on some of the things he said the other day about the catalysts. There's just big catalysts for these guys. I don't see. So look at it this way: go through all the checking, savings, invest, crypto, tech, all the potential products they have, payments, and everything else, and all you guys tell me, from 0 to start to 10 to maturity, where are they on all those products? Because I think on the average they're at 2.
Yeah. Yep.
Right. Yep. The only one they're over 5 or 6 is lending and maybe student loans. They haven't even started. Business banking, there's 38 million small business accounts. Bank of America has 4 million small business accounts. A small business account makes 10x of what a personal account does. So when they have that if they can roll that out, but they have to roll that out right because Bank of America and these guys are going to get on them constantly about this, and they have to have they have to have a payroll service, they have to have factoring services, they have to have a lot of business lending, and so you got to have the infrastructure for that. And I think right now he's just like we discussed last year. He's focusing on capital allocation to get the profitability last year. Now he's ramping up profitability. I would bet business banking is announced this year, implemented sometime in 2027. If he could do it sooner, I think it'd be a big, that's a lot of things. Also, students, the smart card, if they do the smart card right, there's 19 million college students that start every year. So if you couple that, like I've always said, with the student loans, you have, how many members is that going to be additional? You get 19 million here. They're like 60, 70 million college students. So I think there's a lot of wind at their back. I use my credit card there like a secured card. I have a $12,000 credit limit. I charge way more than that. So every week or every couple of days, I go in, I owe this much, and I just take the money out of my account and pay it. I'm not worried about the float because it doesn't really matter. And I think that's a very efficient way to do it, especially if you're not going to borrow on the card. But this concept they've done in the smart card where he says it's going to help you build your credit, which makes it like a secured credit card, but it's also going to allow you to borrow in a different manner than with the credit card. It looks like he's kind of straddling between a smart card that can be for the masses and a smart card with extra benefits that can be for like a wealth management. And I think that's a good way to go. So,
yeah, that's really interesting. Sorry, go ahead.
No, I'm just saying that, and so I don't, I originally got into SOFI in 2021 when Tannor, when I had SOFI, you just came on and I saw somebody else and you were like, underneath this other guy, this young Asian guy, and I saw you. But at that point in time, I bought it from 9 to the way up to 23, and at 21, I dumped it all. And the reason I dumped it all because I thought it was ahead of itself. But then I said, well, I'm going to buy. Look at all the premiums in these cash secured puts. So I bought $15 secured puts. Sold $15 secured puts, like 50, for 50,000 shares, and got like $4.50 down to 10.5. Now, I thought that was genius at the time until the stock got to 4.5.
Yeah.
But on the way up, I bought a ton more because I tried to, every time Noto bought something, I bought 10% of whatever he bought. I said, if he's willing to put that money in, he's a smart guy. He knows more than I'm going to do that too. It got really hard to do that though. You kept putting in way more money. But
hard to keep up.
But I don't think they have, I think I'm on record. I said it would never be 9 again. I said it'd be never 14 again. It'll never be 20 again. And, I think that they're on the road to big numbers. I can actually at the end, make a case for the end of next year at $60.
Man, I'm starting to hear these numbers from a lot of you guys, and it's so you're calling. Let's go all the way back to the beginning here.
Hey,
Okay.
Ned Flanders, hold on a sec. Did we just hear that right? Somebody's more bullish than me right now.
Yeah, when you said 50, I said, what are you talking about? 50?
And I was in the camp of,
You say 50 with business banking. With business banking, I'm saying 80.
Tim, before earnings, I was 1 foot in, 1 foot out, and I was talking about potentially exiting half my position because I felt there was other opportunities I was very interested in instead of putting fresh capital in the market. And then after this quarter, I'm back all in. I'm not selling a share.
Yeah, I saw that, and I actually tell people, because I thought this was a good thing. I'm pretty much at a different point in my life. But if I was younger and I made $200,000 in a stock, I have no problem with somebody saying I'm going to sell, get my original investment back out. Actually, that might be a good move. I have the same thing. I said, and I've got a shit ton of money in SOFI, and I just bought some BM&R, and I talked to Tevis about this. I won't tell you how much I bought, but it wasn't insignificant, and I think BMR can really explode, and we can go into that later. But when I'm sitting there over the month I was looking, I go, but I think SoFi is going to explode too, and there's a lot less risk. I think so. So it's like you're always going to miss out. I missed out on Palantir. I think Roy, when we first talked, and Roy was like, Palantir was like 30 ago. I like Palantir. I didn't buy Palantir, but when it dipped down to 90, I remember I said, I'm buying a shitload of Palantir here because these people are idiots. But I sold it at 180 because I think it's too highly valued. So I'm kind of in Steve's boat. It's like at certain times you got to evaluate what your other options are, right? But I just don't, with stable. When I heard at the end of the CNBC interview, he goes, "We're issuing stablecoin first quarter." I go, "Fuck it, I'm not selling anything, and I'm probably going to be buying more. I buy every week, kind of."
It's so funny. I remember Roy coming to me and he goes, "Do you know Tim bought Palantir whenever it dropped into the 80s? I think like 78 might have been your lowest purchase or something."
Yeah,
and
80 to 92.
Tim bought Palantir. So and it turned out that was like the bottom.
I saw that was like April or something. I bought like 3 months later. It was like 192. If 3 months from now, in January, if SoFi gets to 60, that's an issue. I remember when I talked about HIMS, when HIMS got to 72, I said, you guys got a terrible decision now because it's way, way ahead of itself. And what do? You almost got to sell, right? You almost got to sell. And HIMS has a great management, but they have a business that every time they're ahead of somebody else, they got to find the next thing to be ahead of and the next thing to be ahead of and next to be ahead of. So you really got to watch what management does. And so to me, that's, HIMS can run to 200, and thank God I don't really care if I missed it or not. But it wasn't for me because the business always relies on great management, and they have great management because they wouldn't have got to where they were after 72 without great management. I didn't really like that. I didn't really like him selling the stock after he, kind of touted it on the internet. I thought that was a dick move. But
okay, let's try to go back because you said so much at the start there.
Okay.
You said you have a hard time envisioning them seeing anything less than 40 cents for full year 2025.
If they want to, because they have 4 to 6 cents, I think, of tax benefits. So he's saying 37, add 6 cents.
Why
You know,
why is no Wall Street analyst seeing that right now?
because most people don't evaluate the tax effects. I would say,
Well,
I've looked at a lot of these analyst reports, and I've kind of torn them apart online, because that's how I started out. Is when you and DDI were getting shit canned by 50 people. I said, this is just total bullshit. You guys were right and they were wrong, and I just didn't want to let it go with the capital raise and all that other stuff, and the capital requirements. And so that's how I started posting in the first place. But now they're coming around. You just say, they're always half right, and so just double their estimates. Right? They don't know how to do it. I've talked to a couple of them.
Right, so double their estimates.
Yeah, I've talked to a couple of them. I won't say who. I've texted back and forth. I said, "Did you ever consider this?" Well, we don't consider that. And the biggest problem with analysts is they don't properly, and they really can't, or they're taught not to, how to evaluate future businesses that don't have any numbers associated with them. They really very poor at that. Like, they have no idea. Oh, we're not going to put anything for credit cards because they don't have a credit card business. Well, they're going to have a credit card business, right? You can evaluate it and discount it. You got to put something for it. And the guy goes, well, when they get there. But that's kind of like valuation problems generally. When valuation people testify, they're really taught not to give any value to something that's speculative, no matter what the percentage likelihood is.
Yeah, it's so weird, right? Like, whenever we Q4 2024, all the analysts are saying, okay, SoFi is saying we're going to get 25 cents EPS. We'll believe them, 25 cents EPS. Then it went up to 28, then 31, and now they're saying 37. There's zero look forward. Like none of them are projecting anything that SoFi isn't telling them to their face.
Dude, not only that,
go ahead.
I think people have completely forgotten the 55 to 80 cents, for next year. And okay, let's say even if they close in at 40, well, that was a range that they provided a long time ago. And I think next 3 months, you're going to get a revision. I mean, you're definitely going to get a revision of that range, because 2026 is around the corner. And so it's like, okay, well, if they come in at EPS of 40 cents, they have a chance of doubling that for 2026. And I just think that analysts are not seeing that. Like, in the beginning, they were sandbagging SoFi's own words, and to some degree, many are still doing that. But now I'll go so far as to say, like, give them the benefit of the doubt, and go so far as to say they're like linearly extrapolating it. But what's happening is SoFi as a business is compounding their growth and accelerating their growth in many segments, like the loan platform business. And so they're still going to be behind, even though they're doing this natural like stair step for SoFi. And it's just consistently behind the 8 ball as a result of having a lack of forward awareness of this business potential.
Yeah, I'm actually, remember, we all forget they said 55 to 80 cents without any additional businesses. Remember?
Correct.
They said 55 and 80 without any additional businesses. Now, I think that was because they gave such a wide range, that was him trying to protect the stock. Noto was trying to protect the stock, which he did a good job of. But at 80 cents, they could get to 90 or 95 cents. And the way I look at it, and I'm just doing back the envelope estimates because I have this, acquisition model and a private equity model that I use to do cash flows and stuff like that and valuations. But, if they get credit cards going earlier this year and have crypto all year and have level 1 options, at a couple, man, 2 or 3, 4 cents maybe. But they could get to 95 cents. I mean, credit cards are huge depending on how they roll it out, but that's just up to them. And so people don't realize when Noto says we're hiring people, he has to hire people. He does not have the infrastructure for 50 million members. I'll tell you that. No matter if you do it, no matter how you do it. And so he's got to build that infrastructure in 26. So 2026 could be 80 cents, but 2027 is going to be over 125 fairly easily, I believe. And then 2028 is going to be the big year because he's going to have all these expenses he's paid that's holding down income, even though he's hitting those income guidelines, that he can actually slow down once he gets everything online in 2027, in my mind. Because the revenue will ramp up a lot faster than the expenses. If he gets business banking in 27, that alone, 38 million small business accounts. If he got 3 million of them, that's almost the equivalent of 30 million members.
So,
So,
Tim,
Tim,
how important do you think business banking is? Because I've been banging this drum for a long time.
Yeah, I know, and I've been on the other side of you for a long time because I think it's very, very, very important. I just think it's like when people said get level one options, I said he's not going to do it because there's not as much money as cost, and he's not profitable. You got to understand when you manage a business, I will say this, they are stellar managers of profitability quarter to quarter. Stellar. I've seen a lot of guys, I've consulted a lot of companies, they are stellar. The Deloitte people they use, they are stellar. I used to be a partner at Deloitte, right? So they're going to, what more do you need besides like 20 quarters or whatever it is of triple Bs, right?
Yeah.
But you need a little bit more infrastructure for business banking, and you can take away from the big banks right and left on small consumers. I think I don't know how many a trillion, how many millions of billion accounts that all the other people have, and they just take away, and they're just like a fly. You go into business banking, that's eating at the heart of Bank of America. That's eating at the heart of that, and you're going to probably have a shit ton of customers. So you have to have the infrastructure to enroll them. You have to have the connection with ADP. You have to have the connection with payments. You have the connection with lending. You have to have business lending. You have to get different business lending people. There's different underwriting. There's a lot, and I just didn't think they'd focus on it until they got more hugely profitable. And it's where the rubber will hit the road with the competition with the big banks. So I thought, just like I said, I never thought they'd have a big bank tech deal at least mid 2026. It's just the timing on the way those deals structured is off. But I agree with Steve all along on all the business banking thesis. I just don't think the company was if the company was mature and a 6 out of 10 all things rather than a 2 out of 10, I think they would have done it a year ago. But I just don't think they're there. But the good thing is they will get there.
Yeah, they're going to get there. And
they're going to get there.
Outside of Bank of America, there's a lot of regional banks that they can chip away at also, because that's probably going to be the easiest way to pick up banking customers. And the thing that on the other side of it that I don't understand, you have Liz Thomas. Utilize her, put her as the face of wealth management, ping that off of business banking, start the full custodian of 401ks. Not only are you getting business banking and business lending, now you become a custodian for 401k plans, and they already have their proprietary ETFs and mutual funds. So they're able to double dip on fees.
Yeah, that's I agree with you. That's huge. When they get it is the issue, but that's huge. That, like I said, you get 3 million small business customers. That's like getting 20 to 30 million regular customers for profitability. And I know that because I know how much I pay as an individual person banking with Bank of America when I did. And I have two companies with business accounts at Bank of America, and I know how much I pay. Just for the audience understanding, I went in my business. I don't make that many deposits. And they said, we're going to have to charge you for depositing cash. I go, are you out of your mind? How much are you going to charge me? $15 for depositing cash? They've already raised my minimums on my business account from $5,000 to like $25,000 in one case and $50,000 in the other to get free checking. I said, look, if I had $50,000 to get free checking, I'm losing like $2,500. I'd rather pay you the $29. But there's no alternatives. I'd switch my business accounts in a second, but business accounts will be harder to shift because they use, the lending, and you get a lot more personal service on business lending, especially if you put a lot of money in the bank. But I agree, the regionals are a better target, but part of they have a lot better relationships with their clients. Bank of America, and especially Wells Fargo, Bank of America has 4 million small businesses. You could easily get 500,000 of those. Easily.
Look, it's not that I'm bearish on business banking. I understand the potential for it to accelerate the business, and I agree that it's a step that they eventually have to take. I just am sort of going off of their previous new ventures to create a framework around the launch of business banking. And the conclusion I come to is that it's just going to take a while, right? Like they're probably going to launch it, and it's going to be a slow ramp up. And it's going to be something that really manifests in terms of revenues, not in 26, but probably 27 and beyond. And that's fine. But I think the part that's really exciting for me right now is what's firing on all cylinders, right? Like you have this loan platform business, which LaPointe said on the call, they're seeing increasing commitments from their clients in Q3 and in Q4 going forward. And that's still with they still have the potential ahead of them for student loans, home loans, Then the collateralization of all those, like there's such a really huge potential right now. That is the 26 sort of big rock, right? Which is the loan platform business taking full command. Maybe you could argue that something else like credit cards or a tech platform might finally start to catch a bid. But really 26 is going to be about the loan platform business and all this business banking talk. I'm with you guys on how bullish it is, but I think it's going to play second fiddle in 26 and then maybe start to shine in 27 and 28 and beyond.
Yeah, I think it's going to be in 27. I'll tell you why. You're going to have a credit cycle, right? You're going to have a down credit cycle at some point in time. And when you have the down credit cycle, that's when you want to have jumped in on business banking pretty heavily, because it's going to help you from falling. It's going to provide a hedge against the credit cycle for personal loans and things like that. And business banking is pretty much, the small business banking is pretty much not totally immune from a credit cycle because they're in business and that can affect them. But they usually have enough money and payroll and stuff coming in all the time that it's just free money. It's like Bank of America's free money. That's why I said they're going to fight like hell in business banking. But they're not going to have a choice because Bank of America and Wells Fargo just screw their business customers right and left because they don't have any choice.
Can we talk pivot a little bit over to the loan platform business? This has been accelerating so much. We finally have year-over-year statistics because it came out in Q3 of 2024. Whenever it came out last year, we saw $1 billion of originations. Now we're seeing $3.4 billion of originations at a slightly higher take rate. Tim, what does this product mean for the future of SOFI? And is this something that you're paying attention to, or is it a game changer? Is it just another product? How do you look at the LPB?
It was a game changer last year for the very fact that it allows them to expand much more rapidly without having capital requirements. That's number one. That's the number one thing that helped them. It's going to fluctuate now because as interest rates drop, people are going to lock in higher yields. And if they drops in December, if they drop in January, you're going to have like institutions buying it. And if they have some credit-worthy problems, SoFi's not going to have on their underwriting that credit worries. Now, I do have a little bit of concern about when they go outside the credit box that those buyers of that may, if they go too low, they may have some issues with that. But I don't think it's going to zero it out. It might just cut that part of it 20%. But then you're going to have mortgages on it, and then you might have other parts on the loan platform business. So I think it was a game changer in last year at this time, right? And so people say, oh, the stock's fallen 10%, after this great quarter. Last quarter, I remember we were on, we said, and Tannor, you and I were on, I think maybe a loan, and I said, that's the biggest game changer ever. And their stock still went down for the next 5 days, about 10%, So I don't really worry about the 10% declines. You got to see where the business is going. And if I just say, all right, well, there are 2 out of 10, and they got 3 or 4 businesses that they can get the 5 out of 10, and they have business banking, and they have in 2027, which I think that's just my best guess of when they would start it, because you'll see more of like Vadim's. Give Vadim a little credit here. You'll see a lot more of his business banking employment opportunities will ramp up, and then they'll be within 6 months of trying to do something. I think 6 to 12 months, and I expect that would happen. Will happen more so in early 2026. But the loan platform business is just it's kind of like, why didn't I see that? I mean, I predicted a lot of stuff that I thought about, and like credit cards and stuff like that. I go, well, God, why didn't I see that? That was like, when I said that, I go, God, what kind of idiot am I to not come up with that idea?
No, but you know what? I just to push back a little bit on the as they go further down the lower and lower FICO score bands, they weren't doing that either way. So even if they start to face a little bit of credit issues with those, that's customer or different customers that are buying up those loans. That's still not a risk to SoFi. It might be a reputational hit.
It's not a risk to them, but the appetite for those loans, if they start defaulting on a greater basis at a lower rate, you're going to want to move your credit box up higher, right? If you're the buyer, if some of those start going default, it's like so it's just there isn't an unlimited supply of loans, right? It's not like, okay, we're going to give 25 million personal loans because we have the ability to do it. It's just it's supply and demand, and right now the demand is really high, And even if the demand from the institutional investors falls off, you're going to have a huge demand with these lower rates from insurance companies, and they can just use their higher credit worthiness and make more money selling that to insurance companies.
But wasn't that an industry that we just the sort of lower bands of the credit that we just weren't touching that at all? So it's kind of like a brand new product for us to sort of go down into.
It's a hugely new product, and you're not talking about going sub 600, right?
Yeah, right.
So you're gonna
or something like this.
Yeah, all the problems now with like you see a lot of the problems that people are having are in the auto loans, and my son's about 30 and he has friends, and a lot of them are just not that bright, but they go out and I go, you're paying $900 a month for a student loan. And I guarantee you my net worth is like 1,000, 10,000 times yours. And I wouldn't get a loan like that to pay on my car especially with your income. But they're like, oh, well, I got all the money from the federal government and I was paying my loan with the federal government. I mean, it's just, so the subprime auto has always been an issue. Always. The fact that they're having problems is not a surprise to anybody. That doesn't reflect poorly on SOFI's cadre of customers, and they go down to their average of 750. They go down to 680 or something like that. You can go down to 640, and you're not going to have problems, really. I mean, generally speaking. And go back to 2008, and you can figure out where the problems were and how those loans performed. You're not going to have a worse situation than that.
Yeah, their credit performance is really good too. So no issues there. I think if SoFi had reported like 2 weeks earlier, there would have been a lot of eyes on that, and there weren't that many questions just because they understand. Sometimes when companies have terrible results, it's just the company that's the issue, or very in this case 2 companies. It might be a couple others too, but yeah, not SoFi.
Yeah, it's just, and the stocks run up quite a bit before earnings, like it always does. And there's people that trade it before. When I had it at effectively 11, and I stopped buying it, I traded around the earnings and made a ton of money, just buying and selling the day of the earnings. I mean, or the next day of the earnings. There's still that issue where people making a ton of money doing that, and so you're gonna have other people that bought it at 20 and they put too much of their money into it, and they go, I made 50%, I'm gonna get out. And that's what gives you an opportunity, because when they had the credit scare and the drop down, that's when I bought. I buy more it gets like at 28, and I go, okay, at 28, if it goes down to 27, I'll just use round numbers, 100 shares. If it goes down to 26, I'm going to buy 300 shares. If it goes down to 25, I'm going to buy 600 shares. I'm going to buy 1,000 shares if it goes down $4. I've done that throughout the period, and it's always benefited me. But I don't get as many. I never get really as many shares as I want. But my average share price has benefited from that.
Yeah.
So let me ask you guys. This earnings was great. Steve, you said it was the best earnings that they've had. I think I was very close to the previous quarter. It might be even more complete. Really good, solid to put 2 back to back. Gives us a lot of data points. We can see the annualized, like we talked about, loan platform business. We can see that clear acceleration. Tim, you talked about what they can do for EPS in quarter 4. All right, so the next big date for SoFi, or deadline rather, is with these PSUs, the 25s, which are all but guaranteed. They might already have, actually. They got to be really close. 35s and 45s. Has to be volume weighted average that holds at or above those levels for a sustained amount of time. Remind me if is that 60 days?
90
days. So, there's not a lot of time left. So in your guys' mind, I think the last time we did this, nobody was saying that they were likely to get the 45s, that they could, but 35s were looking pretty decent. Has that shifted for you guys?
Well, go ahead, Dan.
You're saying if they can hit 45 by March. or if they can end up getting that deal?
Yeah, I mean, there's a lot of ways to do it, but not much time left. In essence, I think we all put it a very low chance of them getting the 45s. Has that shifted for you guys?
So let's put it this way: 45 in March, and it's got to stay weighted by June, because that's when it's over.
Yeah,
or it could be under in March, but then it's got to be way over much later.
Right,
It's got to be a
right.
weighted
Kind of
average.
balance out to 45.
Yeah.
What I will say is that there's a solid chance because in March or from now until March, we're going to have at least one more earnings and we're going to have 2 chances to be in the S&P. And I think both of those things will give a big momentum shift.
As you recall, last November, the stock went up 50% last November, right? And I'm not saying it's going to go up 50% this November, but if you're at 30, 50% is 45. And I don't think they get there because I think it gets harder as you get bigger. But you do have the S&P inclusion that is good for probably $4 or $5. And I think they'll definitely get the 35s. And I think I did a post where I kind of analyzed, I go, I think it's like 50-50. If they get S&P inclusion in March, or if they get it in December, even better. But March is probably the best thing. And I think they have a 50-50 shot, but I just don't think they can get there because I think the average kills them. But I don't think Noto cares. I mean, people think they care. I've been in a position where I've had tons of stock options in 3 different tranches, and people have tranches. And, you know, the extra 2 million shares, he probably wants to get the shares more for his people than he cares about the 2 million shares of the 45 for him. But most of the executives and people that I did, it's like, you know, if we get the first 2 levels, we're golden, and we'll get some more later, right? They don't have to get there. He's not, well, put this way, he's not going to change his plan of gradually beating, and gradually going up. And all of a sudden, I'm going to throw everything in the kitchen sink in there to get to those 45s. He's not going to do it. He's not going to kill his potential company to have a down period in the second or third quarter next year because he got those 45s. He's just not going to do it. So therefore, I think he might not make it, but they'll definitely make it. I definitely think by the end of June 30th, they'll hit 45. Especially with S&P inclusion.
There was after we had started this call, the president and Xi ended up getting a trade deal with China. So the big points here. Is that what you have here?
Yeah,
right?
yeah.
Okay. So if you just go to those first bullet points, the first ones. Yeah. Halt the flow of precursors used to make fentanyl in the United States, effectively eliminate China's current and proposed export controls on rare earth elements and other critical minerals. This one, huge, end Chinese retaliation against U.S. semiconductor manufacturers and other major U.S. companies, and open China's market to U.S. soybeans and other agricultural exports. They go into specifics about the 12 million metric tons of soybeans and everything, but does this potentially change how bullish the markets are opening up for next week? I mean, maybe
Oh my God, we're going to
35
7,000 next week.
Yeah. No, this is a huge deal. This was the major worry. It seemed like the market would shrug off most other worries, a little bit of exception to the auto loan stuff, and a little bit of consumer weakness. So very likely, like, this pumps. I don't know that anybody was necessarily expecting a dill versus just kicking the can down the road. That's at least what I was expecting. There is a little bit of that, by the way, because I mentioned that certain things will not be put in place for at least a year out, basically on the United States side towards China. But yeah, this is incredibly bullish. It really does, I think, also change the equation. I probably should have mentioned this first with them getting 45s, just because if we're in a persistent bull market, this likely carries us all the way through until the Santa Claus rally, because we're that close. And maybe we don't get a pullback until early next year now. So yeah, that helps the volume weighted average tremendously. Going back to that, I think maybe like 15 or 20% chance. I wouldn't say it's odds on favorite, but yeah, this is great for all of our stocks, including SoFi and a little company known as NVIDIA, right, Tanner?
Sorry, on NVIDIA?
A little company known as NVIDIA might be impacted. I don't know if you guys have heard of it before.
Maybe. We'll see.
Yeah, they're small, but they're doing good things.
Steve, any raw reactions just to that little piece of breaking news?
Yeah, I mean, I may have to upgrade my end of year target at this point. I mean, a lot of people thought I was crazy on the December 31st stream when I said 7,000. A lot of people thought I was crazy in April when I said 7,000 when we were at 4,800. After earnings, after this, I could see us going 71, 7,200 to close out the year. And here's why. There aren't many things for people to tax loss harvest on at this point. So we may not get that drawdown.
I hadn't thought about that. That's 100% right.
No, but think about it. I mean, everybody is up on so many things, and the things that aren't up are just kind of stagnant and they haven't fallen. What's really fallen that people are going to sell off and then have to sell something to take profits. But in order to get out of the wash, I don't think people are going to want to get out of an Amazon or an Alphabet and then wait 30 days, because guess what you have at the end of January? You got Q4 earnings coming up. I mean, we could see a big cycle right now.
Yeah.
What do you guys also think about the odds of SOFI being potentially one of the next targets for the S&P 500?
It's on my list of catalysts in front of me.
Tim, where do you place the odds for December?
30%.
For S&P?
I think they would. I think if I'm the S&P 500, I want another complete year of profitability. I want the complete year of profitability to look at. So I would go with March instead. Like 70% in March. I don't think they'll delay it far past that.
I think that's fair. They definitely waited a decent amount of time for Hood to get in after breaking profitability. They could wait for SOFI as well.
Yeah, but you can make an argument for December because you've already taken out a lot of the good companies, and so although there's a lot of good companies left, there's not as many, and so your odds just naturally go up. So that's why I say like 30%, but I'm not expecting it. And if I'm Noto, I kind of want it to hit in March, right? I want it to hit. I want to get the stock to 38 or 39, and I want it to hit in March. Then my 45, I start in April, and and he's a gradual mover. He likes to move gradually. He doesn't do a lot of hyping, a lot of public hyping. He's getting better. He's getting better at his much better at his presentations, though. I will tell you that.
Yeah. I mean, that's been something that you've been covering a lot too, as well as like Noto is obviously a different type of management style than the likes of Vlad and other CEOs that are more online and sharing their opinion. But Noto's been on X a lot recently, sharing more of his opinions. Do you think that he is trying to be a little bit more vocal and share sort of the direction in which SOFI is going for the retail audience?
Well, I actually know he is. Okay. I'm not pretty sure I know he is.
And what gives you that confidence?
I can't break that confidence. I just know he is.
Yeah, understood. Okay. Roy?
Yes, the S&P 500 conclusion. That's I would not get hopes up. Even through March. I think that there's a decent possibility. I wouldn't put it at 70. December is very unlikely, just because they are fairly new to profitability, and there's a lot. Like, the hard thing is they tend to rotate off companies at a very slow rate that they could otherwise kick off. And there's a lot of really good companies that kind of stand in the way. So I think that we'll see it next year, but
whenever it is, it will be at a higher price, which will stimulate it to go even higher price. And so by holding it off, if you have a 10% adjustment at 30, you get to 33. If you have a 10% adjustment at 50, you get to 55. So I put that as like in a savings. That's a savings account for me. I don't really consider it or plan on it.
Yeah.
But let me caveat that I don't sell a lot of covered calls or anything on SOFI, because I just think any minute you could have something like that and you're just going to be called out of your whole position, and I don't want to be called out of any of my position. And so I didn't buy leaps as much as because I had the money. I just bought stock, and so I have enough stock. I'm not going to get greedy with the options, and I don't have time to track them. And like TJ, I had a discussion with him. I said, I used to do this stuff. I can tell you what TJ is going through, stressful moments every day, managing that every day with that amount of money. I mean, I didn't have that amount of money when I was like 26 when I was doing it, but I was making $40,000 a year, and I had $200,000 all my money gambling on options. And I'd go into the office, and for the first 3 hours of the day, 6:30 to 10 o'clock in the morning, I wasn't doing any work except calling back then, calling my broker. I'm on the phone with my broker. What's going on? It's like, it's pretty stressful at my age. I don't really deal with that, but for BMNR, I'll do it because I think it's just easy money.
There you go. Any other topics that you guys wanted to touch on for SoFi earnings? I don't want to just go down the line here.
Yeah, I want to get Tim's opinion on one thing with SoFi. So, do you think that we're going to get an expansion in the NIM since we're in a rate cutting environment and SoFi was able to issue so many loans over the past 2 quarters, or even 3 quarters, I guess?
Yeah, I think they will, but not as much as you think, because I think they're going to try to still, like he said, they can keep their interest rates higher longer. So,
Yep.
that's going to offset it a little bit. And that's interesting you brought that, because I thought about this, like with people like going the stable coin issues, because we're going to stable coins and banks. The Genius Act says that banks can't give rewards on stable coins, but I actually sent Noto and I did a whole legal argument about how we could do it. But the easy concept is, if SoFi has stable coins and they're making money in those treasuries, they don't have to give the result. They don't have to give money back dollar for dollar for treasuries, but money's fungible. They can give other kinds of rewards back that really going to profit all their customer base, including the people who buy stable coins. So there's a workaround around it. But I think the NIM will say he could increase it like 10% or 8%. It'll probably increase 3 or 4%. I think it'll increase. I just don't think it'll increase as much as it would, because I think he's going to keep the rates higher. And I think that's probably a good idea, especially with Robinhood going into banking.
Yeah, it'll definitely make the checking and savings accounts more advantageous for people to come over, because they'll be so much higher than pretty much everybody else. Yeah,
the most important metric to me, absent getting into business banking, which is really important to jumpstart the profitability of the stock, is just acquiring more members. So if I'm managing this or consulting with them, I'm saying, look, whatever we can do to get more members on our platform, because once they get on their platform and they use the app and they have their checking and they have their savings, and then you get them in invest or you get them in a student loan, they're pretty sticky, and they're also say you got to like 50 million people. Then he has 50 million customers. Then he goes to other people, I have 50 million customers. You want access to my customers? You want access to my customer data? You start selling that stuff. And you also get benefits to your customers. Maybe you add Amazon Prime to your your SoFi Premium Plus account. And so everybody gets free Prime. There's a lot of things you can do when you get 50 million members. Now, I don't think I get 50 million members in the next year or two, but when they do, it's a huge base of income and data.
Tevis, anything that I want to allow you to get any questions in or anything?
Yeah, I mean, I don't know. Like, in terms of the earnings, it's interesting that Roy said earlier that this might have been the best earnings, and I think it was very, very good. I think they had tougher comparable periods, which makes it look less good from a percentage perspective. But this was also the earnings that saw the tech platform contract in terms of accounts, in terms of margins, in terms of the actual revenue itself. So there's serious question marks, I think, on the tech platform. Nobody really cares, because financial services is carrying the water for the entire business. I mean, lending was up 9% in terms of revenue, and that also contracted somewhat. But financial services is just keeping up the growth rates. But there is unanswered questions on the tech platform that need to be answered sooner rather than later, especially in the context of the Derek White news, right? They didn't address that. They're not going to address that, but they happen in conjunction. So, I think if I had to deduct points, it would be because of that, because it opens concerns, let's say, and we're giving management the benefit of the doubt here, because they said Q1 26 is really, we're going to see an acceleration. But I also want to see, what is more commentary around who's going to take over Galileo, around what that plan is, around, the deals that they're announcing. The stock popped on Southwest, and I think we want to see a higher breadth of the actual partnerships, and we want to see accounts going back into growth. I also think Robinhood totally dropped them as a partner as well. So I don't know, we'll see, but that was my main sort of beige flag, I think is the expression.
Yeah, I don't disagree with that on the tech platform, but I think it's just a matter of the way Noto focuses. The tech platform, for all the players in that area has been kind of slow, And so he's going to pivot to what's not slow and to put the capital of things that's going to grow faster. And I think tech will grow faster in 2026. I mean, I talked to like a couple of big banks executives, and it's just back, I said about a year and a half ago, like Wells Fargo got rid of like half their wealth management department. They're trying to send it overseas, which is a wrong answer. That's not going to work out well for them. They know that they need new tech. They all say they need new tech, but the problem with it to some extent is how you allocate the cost of the tech to the different departments and divisions, because the people like in wealth management, the people in securities don't want to have to pay for it. And they have to pay for it. They have to pay their share of it. And so a lot of those people are objecting to it. So that's why I thought it's going to take several years. But, Citi needs it. Wells needs it. Bank of America, not as much. Chase doesn't. But, with all these debit card deals and the way that it exploded with Southwest and stuff, I think tech will come back a little bit in 2026. But the AWS of fintech has switched from big bank software to me to stable coins in my mind. And if I was in the boardroom with them and they said, okay, we could focus on stable coins, these payment rails and this, or we could focus on getting Citicorp to use our tech software, I'd say, if you're going to allocate resources at this point in time, you're tech, the financial technology that the banks could use, eventually they're going to have to get something from somebody. But you don't want to get behind in stable coins. You don't want to get behind on payment rails. You don't want to get behind on this, the use of Ethereum and stuff. Because before I got into BMR, I contacted a lot of people. I go, what do you think? Are you guys investing in it? People I know on Wall Street. And they're like, they're all like, yeah, we're all going to use it. And so you can't get behind on that. So if you're going to allocate resources in the year 2026, it's probably, it could have been that Noah says we're going to allocate resources, and Derek White says you're not going to give me more resources to do X, Y, and Z, and how am I going to relate? And so I don't really want to stay. I mean, that's quite possible. Could be Derek White had something else to do. Who takes over at Galileo to me is not as big a concern. If Noto left, that would be a big concern. Derek White leaving, it's a concern, but it's not going to affect the stock price. It's probably not going to affect Galileo. He had some connections in the business, but if he had more connections, like I'll say, if he had more connections, he might have got a deal.
So, Tim, a company for you that I think you would really like to research, and you may have already done it, but are you familiar with Figure?
No.
Take a look at them. It's the Mark Cagney. He's the founder of SOFI. He's the founder of Figure as well. And they're doing a lot. They have the most real-world assets on chain out of any company in the world. They're profitable. They just IPO'd fairly recently. And the way that they're leveraging crypto, initially with their HELOCs, but across their entire enterprise is like really impressive. Plus, like you can actually look on chain and see volumes that are going on. They have the SEC's first approved stablecoin as well. And just they're also building a platform for lending. So you may really like that one. I hope that SoFi goes some of those directions as well with the blockchain stuff. But yes,
well, don't you think they'll have to though?
They don't have to, but they should.
Yeah.
Thankfully, like most of the old line banks are going to be, they're doing stuff. JP Morgan Chase is no slouch, and of course BlackRock as well. They have the Builder coin, and they're doing things, but they're going to be slow enough that if SoFi is not like first out of the gate, it's okay. A lot of, I think, them saying that they are looking to release a stable coin by a certain time, it's contingent on more regulation. Just like, I talked about with you guys initially that Tevis and Ned Flanders, you guys are Canadians. You don't understand how long it takes most things to get done unless it's just done pen and paper way in the United States government. Do
you think Canada is this like shining beacon of efficiency? Like if it takes long in America, it takes like triple the amount of time.
Maybe so. Yeah, there's some things. Some things are efficient on, but on the government level, not so much. So
you gotta watch the Clarity Act. You gotta watch the Clarity Act.
Clarity and Genius as well. Yeah, and stablecoin.
But,
I mean, they've talked about crypto a lot. They're doing things with crypto. They're preparing the ground. They hired some people. I like Flory as a hiring there. What they put out, some things will work, some things won't. I like that they partnered, for instance, with the remittances, just because it's like, hey, no need to build that. It's a low margin thing anyway. But there are things that they need to build themselves too, and it looks like they are.
Yeah, I was never a big crypto fan, and because I didn't see like Bitcoin, I didn't see the use case for Bitcoin. And as a store of value, everything's a store of value until it's not. And in the apocalypse, I'd rather have my yard where I can build, where I have water rights and I can plant food than have Bitcoin, because nobody's going to in that kind of situation. But Bitcoin does have some use. But the more you look at it, Ethereum has way more use, and so it's either going to be everything on Ethereum, and people are going to, a lot of people are going to get rich, or it's going to break crypto. If because there's so many people pouring money, all the like Tom Lee's for BNR's got a $15 billion market price offering that he just goes to, and they just he probably could get 40 billion or 50 billion, and then BlackRock's putting money, everybody's putting money in it, and they're not all stupid. I mean, I was a little bit, because I thought, Ethereum, well, it has a use case, but Bitcoin's gone up. I think that Ethereum, I don't think Ethereum's going to get to Bitcoin, but I think it's going to close the gap. It's a question though, but Ethereum, Tom Lee keeps buying, like saying he's buying at 3,800 and 3,500, and then it goes up to 4,200, and then he's not buying, and he goes down and buying, and I go, is he smart enough to take his Ethereum and just manage trading that to drive the price down a little bit so he can buy more at a different level? I mean, there's a lot of things going on Wall Street, and I just think that Ethereum has is right in the zone right now of where it's either going to stay stagnant for it's going to stay stagnant for a certain period of time, and then it's going to jump, and when it jumps, it's going to really jump. As soon as somebody starts getting stable coins and they issue it and they say Ethereum, if that thesis holds out, then it will go up pretty substantially.
I love how much you're talking about BM&R, Tim. You've brought it up like 4 or 5 times.
You got me into it. If I lose money, I'm coming. You got me into it, so if I lose money, I'm coming after you.
What the? It's not financial advice.
I have a lot of money in it, so you better hide.
Does that mean if you gain money, you're all?
I think you guaranteed me it, in fact. But not on YouTube.
Where's
not on
my
YouTube.
guarantee? What the hell?
Steve's been right so much. I kind of like watch you guys and say, okay, well, who's going to disagree with Steve on this one? Although for SOFI, I thought you were a little too bearish.
I mean, look, I did get a little bearish on SOFI. What I think I'm in the camp with you, because what changed for me with BM&R and Ethereum was the Genius Act, because I was only on the XRP bandwagon for the cross-border payments. I'm not going to go down that road, but when this got signed and it created the clarity, and you look at David Sachs, you look at how his whole crew thinks about crypto, you look at Brian Armstrong, you look at who's given their opinions and who the administration's listening to, and then you look at where everything looks like it's moving with stable coins, and you see MasterCard building their stable coin on Ethereum layer 2, you see PayPal, you see Shopify, and you think about the transactional value on that and the volume, then you look at tokenization, you look what Vlad is saying, you look what other people are saying, we're tokenizing assets. And then you start thinking, okay, Ethereum has a cap of issuing 1.51% new Ethereum per year. If stablecoin adoption actually takes off the way that it seems like it will, this could become a deflationary asset and push the price up.
Then, because of gas fees, right? Yeah.
Exactly. And then if we actually get real world tokenization over the next couple of years, that will be even more accretive. Part 2 of that is, I don't know that any political party can win an election at this point going against crypto. So I don't think anything's going to get overchanged no matter who gets into powers. I think they're going to have to be at least neutral on crypto at this point. And then you have the idea with BM&R, because I've been buying both Ethereum and BM&R. The reason I'm buying BM&R is because they have a huge opportunity with not just staking, but also restaking and restaking through DeFi, which through the research that I've done, they may be able to get that yield up to 4 to 6% restaking through DeFi. And that becomes immediately accretive to the bottom line, which they can just buy more ETH and increase the MNAV or buy back shares. So that's very interesting. So there's a lot of things going on with this that just make it seem like this really could work. So that's where I am on this.
The risk I see with Ethereum, when I was thinking about it before, when I was negatively thinking about it, I was like, something else will come up maybe that's better. And then I thought, because back to Betamax and VHS controversy, when VHS, Betamax, I don't know, you guys don't know, but for VCRs, Betamax
Unfortunately, I do.
Betamax was 10 times better than VHS. But VHS got out there first and was broader and went to the masses. And then so much stuff was on VHS that Betamax just fell off. And I represented Sony at the time. So I went through this with them. I was like, what are you guys doing? Just don't charge so much for it. And they're like, well, the Japanese, especially Sony, was like really proud of their technology, right? But Ethereum gets out there fast enough, and it'll stay for quite a while because they'll just adopt it because you're not going to.
Let me give you some stats because I have these stats. They're about a month and a half old at this point, and I am going to update them. But Ethereum was hosting over 767 billion in assets on their blockchain, and they had become the largest platform for stablecoins and hosted roughly 60% of all stablecoins. And they were hosting 80% of all tokenized assets at the time when I had written my article on Ethereum. And there's just a lot of big things going on with it. So I'm going to redo all the numbers. I don't know if Tannor, aka Ned Flanders, or Tevis or Roy, I know they all follow it closely. Do you guys track the volume of what stable coins are on their layer 2?
No, I don't.
Yeah,
Roy, you're shaking your head. Do you know what the new number is?
I don't remember. No.
No, not the amount of different stable coins. You have a number for that? I know the dollar figure of the amount that's tracked on Ethereum.
Yeah, there's a lot of different places. My favorite is the DeFi Llama stable coins.
You share this?
But yeah, I can share my window if you guys want.
Steve,
so you can look for? This is all the stable coins, 307 billion. Oh, that's not mine. Okay.
Steve, is this what you're looking for?
I was looking for a percentage because maybe I can
so
find it on the site. Ethereum
307 billion for all. Here's Ethereum, 165 billion.
Okay, so right around that number.
1.9. Well, that's a USDT. But yeah, it's about a little over half. So. And let's see, if we go back to this, we can go, this is actually the dominance. There we go. Well, it was for the dominance of the different tokens. Actually, that's not what we're looking for. So
yeah, it would have to be by protocol.
Yeah, I know that maybe it's Artemis that has that. Or Doom,
yeah, and Ethereum is winning market share right now. It's not just growing, it's growing faster than their competitors.
Yeah.
But honestly, I think that we should take this into the after hours, where I would love to talk with you guys about big tech earnings as well, because obviously that's been very important this week.
Yeah, I'd also love to ask Tim, and also you too, if you saw the PayPal earnings and what you thought on that. Can I also do one last SoFi thing that takes 1 minute?
Sure.
So I've seen this in the comments here twice tonight, and also once on a YouTube video and also once on X2. So I figured I'd just throw it out there. There is a creator, Jerry Romine. I've seen a couple of his videos around, I guess a couple others too, that are basically out there sharing a bear thesis on SoFi, kind of bearish. Not like, I don't think that they're super bearish, but they're basically saying SoFi is at risk because of levered free cash flow. And it's a fundamental misunderstanding of two things. One is newly profitable. Let me just, levered free cash flow is different than free cash flow. Free cash flow would be even dumber. Levered free cash flow is essentially the cash you actually make minus obligations. So debt repayment is a big one, and it's a big one for SoFi as well. Newly profitable companies like SoFi rarely have a positive levered free cash flow. Second, banks are highly leveraged by intention and design, and they're using debt to be able to do things like issue loans. And so JP Morgan Chase has a negative levered free cash flow in the billions. So if you're bearish on SoFi because of a negative free cash flow, you need to be bearish on banks in general, and also just admit that you don't understand how banks work.
Did he sum that up well, Tim?
Yeah, I just say, a bank holding cash is not what they do. So they're going to spend their cash. I mean, the bank's going to hold cash and then put them in treasuries for overnight window for a couple percent versus lending them out for 12% or 15% or commercial loans. I mean, it just doesn't make any sense. You can't use that as a metric.
Yeah, ROE.
Look at that. I mean, look at how their profitability, right? Because they can always sell their loans and get cash. And in times of trouble, banks do sell their loans and get cash. So, but they're the business of selling loans, and they sell loans and take that cash, invest in new loans. It's a round trip. You just keep, if I said you got 50% free cash flow or something like that, you'd be a terrible bank. Terrible bank. But PayPal, PayPal gets such a bad, a bad rap. But PayPal, but I had PayPal. And I sold it at 73 in the summer, and I took that money, I rotated it in at SOFI at 20. So that worked out pretty well.
Yeah.
But I think PayPal suffers from when the new guy, what's his name, the new CEO?
Alex Chris.
When Alex takes over and he takes over a new business, you're gonna have first year where you kitchen sink stuff, you find your way around. The next year is that, and the third year you start hitting on all cylinders. So I actually expect the negativity regarding PayPal to decrease substantially in first or second quarter next year. And I think that's when I'll start looking at it first quarter, because I think that's just what you do in almost every business where we restructured. You're not going to get anything till the third year.
Yeah, quarter four is when I think that they'll make that pivot with the earnings. Yeah.
But I mean, their numbers are good now. I just don't think people trust them that they're over their problems, and they're like, what problem's going to come up? And the more you go. And he's doing everything right. He gave you a dividend. It's not like much of a dividend, but he gave you a dividend. I think he should jack the dividend up a little bit. It gets more people interested. But they're doing
Roy hates you just said that, because I've been yapping his ear off about that for months.
Yeah, Mr. Dividend Streams likes dividends. Surprise, surprise.
I mean, if you have a 3%, look, I'll give you a good example of a stock, because I'm from Peoria, Illinois, and I know a lot of people that worked at Caterpillar and didn't go to college that have $7 or $8 million now, because all they did is they took their cat stock, and cat stock just paid 3%. By paying 3% dividends over the years, they didn't have to pay anything else. People keep buying it. It's a big base to your stock. It's a big jump. It's a bigger jump getting if you get over 1% to over 2%. I think Steve probably knows this better than I do. You get a huge jump in buyers.
Huge.
By the way,
and Roy hates that you're saying that, because my argument, Tim, has been they've bought back, I forget the exact number, but it's something like 35%. Roy can correct me, of the company over the past 8 years or whatever it is. And at this point, based on their free cash flow and based on the market cap, it'll be in 11 years and they can buy back every last share. The buybacks haven't done anything. While they help EPS, you need people interested in the stock. So I said, okay, $6 billion free cash flow. IBM and Cisco were the two big tech dividend companies, and now they're under 3%. Split it 3 and 3, do $3 billion on the buybacks, $3 billion on the dividend. The dividend would have been about 3.8%. They could have even done a little bit more, become the de facto tech company for dividends. Visa, MasterCard sure as hell don't pay that. And now not only do you get the traditional dividend ETFs, you would have got the high dividend ETFs like the SCHDs, the VYMs, HDV, would have created a ton of volume and $7.5 trillion in assets just in money markets on the sideline. When the Fed gets to probably 3% or so, I have a feeling at least $1 trillion come back into the market, because it's no longer nearly as attractive trying to manufacture yield and risk-free assets. And something like PayPal is a brand name that people are not going to worry about them going away. And they're going to be a company that people will believe can grow the dividend over time. So seeing that 3.5%, 4% yield will attract people instead of going the Coca-Cola route or the Exxon route or the Chevron route, potentially.
Yeah, I actually think a 3.7% write-off might be that people kind of concerning, but I think they can go higher than they did, and they can just say, we're going to move it up to 3 or 4% in the next 6 months. I think that works, because then
I just want to say that's data-driven investing in the chat here. So he couldn't make it on to today's show, but yeah, he also did not like that video, I guess. Guys, let's talk PayPal in the after hours. We got to move this. Stay on some schedules here.
Stay on some schedules. What, you have a schedule here now? What's going on?
Yeah, I got to get to bed.
Oh, I forgot your sleep schedule. I forgot you need the sauna. You need the red light therapy. I forgot.
Hey, I do red light therapy. Don't. Hey, I do red light therapy. Don't crap on red light therapy. It really works. Hey, I'm 67 years old, so red light therapy works.
There you go.
Man.
Okay.
Tanner's gonna, if he doesn't already have it, he's gonna go out and get it now.
I'm the Lux.
Ladies and gentlemen, thank you all so much for watching. Really do appreciate it. If you want to support any of our channels, you can hit the join button down below. That will also lead you into the after hour show. It doesn't matter what channel, it all leads you to the same place.
Not live, pre-recorded.
Not live, pre-recorded tomorrow at noon.
Yeah.
Thank you all so much for watching. Really do appreciate your time, and bye for now.